All right, we're going to see if we can tackle the groups for chapters 1 and 2. In this first problem, we're dealing with Gabby Graham, started the Graham Company. It's a new business that began operations on May 1st. So we see several transactions here for the month of May. And what they're asking us to do is to analyze each transaction within the accounting equation of assets equals liabilities plus equity. And you'll see that we've broken our asset accounts down into 3 detail accounts: cash, accounts receivable, and equipment. Our liabilities, we just have one account, and then under equity we have a common stock less dividends plus revenues minus expenses. I'm going to tell you now that these minus signs are very important. Why is that? Because remember that you have to have the same amount on each side of the equals, right? In order to keep this equation true and not violate the accounting equation, everything has to be equal. So if you have a cash payment for an expense, cash is going to be a negative, and we're going to have to precede that with a negative number. We can see that here. But if it's for an expense, there's already a minus sign here, so we won't have a need to put a minus sign in the block to make it a negative because it is already implied negative. And that can get a little bit confusing. That's why I just wanted to talk about it up front. Not really my favorite way for them to have posed this problem, but let's see if we can work through it. So the very first transaction on May 1st says that Graham invested $40,000 cash in the company in exchange for common stock. Okay, what did we, the company, get? Well, it sounds like we got $40,000 cash, so that's a positive number, no question. And then we exchanged it for common stock, $40,000. And you'll see that's also a positive number. I've got a positive on each side of the equal sign. If I look at my total, I'm at 40,000 equals 40,000. So we're in good shape there. Also on May 1st, the company rented a furnished office and paid $2,200 cash for May's rent. So just for the 1 month. We call that an expense. Anything that you need for operational condition for that specific period is going to be considered an expense. So $2,200 we paid cash. Well, that's negative cash, right? Cash has left the building, so I'm going to put a minus sign, $2,200. Don't worry about the fact that it puts it in parentheses. It's going to do that. You must use a minus sign. It says it here. Don't put it in parentheses. Just use the minus. So now I have a negative $2,200 on the left. What happens on the right? Well, we already said it's an expense. An expense is already implied to be negative. See the minus sign there? So I'm simply going to put in $2,200 because it means minus $2,200. Okay, that's where things can be a little bit confusing. You got to watch that signage. On the 3rd, the company purchased $1,890 of office equipment on credit. Okay, well, it looks like office equipment is on the increase by $1,890. And what does it mean when I bought it on credit? It means I owe someone for it. Well, that's of course going to be an accounts payable. Still a positive number because we're increasing the accounts payable record. Okay. And then we've got May 5th where the company paid $750 cash for this month's cleaning services. Well, the cash is easy, right? Minus $750, but what are cleaning services? Do I need cleaning service in order to continue my operation? And yeah, probably so, because people aren't going to want to come visit me if the place isn't clean. The bathrooms are kind of dirty. Again, this is a negative expense. It's already a negative, so I don't need to put the minus in because it's already there. On the 8th, the company provided consulting services for a client, immediately collected $5,400 in cash. Okay, I like collecting $5,400 in cash. That looks like a positive. You can see how you can, quite often, you can just follow the money. Positive cash, what is that? Of course, it doesn't mean that we owe anything. It's not common stock. It's not dividends. Sounds like revenue to me because I've earned this money, $5,400 there. Moving up to the 12th, the company provided $2,500 of consulting services for a client on credit. Okay, well, I can't really follow the cash, but I know this part. I did services for a client. That's $2,500 in revenues. But what does it mean when a client owes me? Hopefully you're already thinking accounts receivable, $2,500. Still looking good for the accounting equation. I'm sure that if I add this up and then add all of this up, we're going to be equal at the bottom. Hope so, otherwise I'm doing something wrong. And then on the 15th, the company paid $750 cash for an assistant's salary for the first half of this month. Okay, follow the money, minus $750. What are wages, salaries? What kind of things would that be? Always going to end up being expense on the payroll. I got to pay people in order to stay in operation. On the 20th, the company received $2,500 cash payment for the services provided on the 12th. Okay, do the cash first. I get that. I got $2,500, but what's it talking about? It's for this transaction. Remember how the customer owed me this accounts receivable? Well, now they no longer owe me. I'm certainly not going to go over here and book the revenue again because it's already been booked. I don't want to double up, but they no longer owe me $2,500. This is minus $2,500. So I've just exchanged one asset for another. And you can see now that accounts receivable says 0 because now they no longer owe that money. All right, on the 22nd, the company provided $3,200 of consulting services on credit. Okay, well, that's that whole revenue item again, right? I did consulting services on credit. $3,200 is going to be the revenue, and I think the customer is going to owe me that. $3,200, that's what on credit means. And then if I go to the 25th, it says the company received the $3,200 cash payment for the previous transaction. So I received this money. Now I'm getting the $3,200, and they no longer owe me $3,200. Okay. Go up to the 26th, says the company paid $1,890 cash for the office equipment purchased on May 3rd. We paid $1,890 for this office equipment that we purchased here. Well, we owed it, so it was a liability. All right, so we paid $1,890. That's cash going out, and now they no longer owe us $1,890, so put the minus sign. So I get this quite often. Well, why did I do a plus cash here and then a minus on receivables? So wouldn't I do a minus here and then a positive here? No, because we've crossed the equal sign. This needs a plus and a minus because both of them are on the left side of the equal. So it has to be 0 equals 0. And on this side, we've crossed that equals line, so I've got to have the same operator on each side of the equal. If it's a negative here, it's got to be a negative on this side. All right, on the 27th, the company purchased $80 of advertising in this month's local paper on credit. So it sounds like it had to be for this month. Cash payments due June 1st. Don't care about that yet. All I know is that I've purchased something and it's on credit. It's $80 worth of advertising expense. Well, I need advertising in order to operate. That's an expense, so it's already a negative, so I'm just going to put 80. And it sounds like I probably owe it, so I'm going to put the 80 here. So what's the difference now? These are both on the right-hand side of the equal sign. This is a positive number. It's implied because there's no negative in front of it. This is a negative number, so that's an 80 minus 80 to give me 0 on both sides of the equation. All right. On the 28th, the company paid $750 cash for an assistant's salary for the second half of this month. All right. I paid $750 in cash. It's minus $750. We know now that payroll is an expense, $750. So that works out. And then we've got the first transaction on the 30th says the company paid $300 cash for this month's telephone bill. Okay, $300 in cash going out. What's a telephone bill? Do I need telephone for operations? Yep, sounds kind of like an expense to me. All right. Next on the 30th, also the company paid $280 cash for this month's utilities. Okay, paid $280 in cash. Utilities, need it for operations. That's an expense. And finally, we get down to the 31st. They say the company paid $1,400 cash in dividends to the owner. Okay, $1,400. So I paid out $1,400, and it's in dividends. What in the world are we going to do there? Oh, look, Great, there's a dividends account. Notice that just like an expense, it is already a minus as well, so I don't need to put that minus there in order to make it that way. All right, so there's a couple things we could do here. I think what I'm going to do, just for giggles, is I'm going to go ahead and do the calculation on my own to make sure things are right. So on the left-hand side of the equation, I've got 42,780 plus 1890. So on the left side over here, I've got 44,670. I wonder if that's what I also have on the right. Let's see, so 44,670, now I've got 80 plus 40,000 minus 1,400 plus 11,100 minus 5,110, and I get 44,670. Okay, so I'm feeling pretty good about the fact that the accounting equation hasn't been violated, but I'm also just going to go ahead and hit check my work just to make sure, and it says that the answer is complete and correct, so it looks like we're in good shape. All right. Okay, so into number 2, what they're asking us to do now is to create the financial statements based on this information. It's not the easiest thing in the world to do. I'm going to be honest with you, because the information is already quite disjointed. If we had to do this based on all these transactions, they're really trying to make it hard. I'm going to be honest with you. The publisher's trying to make it hard so that you'll realize why we have a system to record information, which is what we learn more about when we get over into chapter 3. Because if I have to always go back and look at every single transaction in order to create an income statement and in order to create a statement of retained earnings and a balance sheet and a cash flow statement, it gets really hard. I mean, it just kind of gets difficult. So let's see if we can kind of muddle through this a little bit. I will say that I've done this maybe just to help us out a touch. I went ahead and just created a snippet of the previous screen so that we could have it open here on the side, because at least now I've got revenues totaled, I've got expenses totaled, so I can kind of at least see some things. So let's see if we can go ahead and tackle this. I need to make this one just a little bit smaller so we can see it more. So the first of the financial statements is going to be the income statement. And even without knowing it already, you can tell that the income statement requires that we report revenues and expenses in order to result in some number. That some number is going to be net income or net loss. Income if it's a positive, loss if it's a negative. That kind of makes sense. So the very first thing that it wants us to work on is the revenues. I'm going to go ahead and pull the box down just to see what it's saying about revenues. I mean, here's a consulting services revenue, and I really don't think that there's any other type of revenue account. I mean, it looks like that's it. It was always consulting services revenue, so I'm just going to go ahead and plug that in as 11,100. Okay, and when we do that, let's see what it has here at the bottom. It looks like there's nothing else for us to really do. There's no thing that says total revenues at all. So then it gets down to expenses. Well, when I pull the drop down, folks, I look at this and there's a lot of different types of expenses that I can deal with, right? So it looks like I probably need to go and find every expense that we saw on the transaction list. So let's see. Common stock, no. Rented an office and paid $2,200 cash. All right, that sounds kind of like rent expense. If you remember, that's what this one was right here. So I'm just going to go and plug it in that way. So rent expense, and hopefully the drop down, yep, it came out with it, and it was $2,200. Looks like the next expense, we had two of them at $750 each. Let's see if we can find those. So two at $750 a piece. Here's the first one, and it was for cleaning services. And then the next one was for a salary, but I think we had a couple of salaries, right? So let's just do that cleaning service first. So we had cleaning expense, and it was $750. So this one was a salaries expense, but didn't we have another one as well? So let's see what we can find. There's the cleaning service. That's revenue. That's revenue. Okay, so we had a $750 for salary, and we come on down here. Let's see what else we can find. That That's advertising. There's another $750 for salary, so the two combined now makes $1,500. Yeah, looks like that's probably what salaries is $1,500. So salaries, there it is. We're going to pop that in there for $1,500. Isn't this kind of a pain? I mean, this is kind of hard when you have to do it this way. Let's go find out what that $80 was. And so where is the 80 bucks? We go and we look around up here. I mean, it's kind of fun, right? Here it is. We purchased $80 worth of advertising. So I was being facetious. This isn't fun at all. This isn't the way that we do accounting, I promise. The publisher is trying to make this hard. So now we've got to find that 300 and that 280. Here's the 300, it was for telephone, 280 was for utilities. Okay, so 300 was for telephone expense, and then 280 was for utilities expense. Okay, that gives us a total of 5,110. It looks like our math was right. So now we've got to take 11,100 minus 5,110. Well, the revenue is obviously bigger, so I think that's going to be net income. Let's go get ourselves a calculator again. Right? We're always kind of doing this backwards stuff. So we're taking the 11,100. Let me just make sure you can see exactly where I'm getting the numbers from. We're taking 11,100 minus 5,110, and that gives us 5,990 for net income. All right, I'm going to check my work, see what they said. Could be wrong. Nope, looks like we're right on that one. So we're good to go. Let's return back to the question. And now we need to do the statement of retained earnings. The statement of retained earnings is always going to show the change in equity because of net income, because of the addition of net income and the reduction of dividends. That is it. I mean, that's what retained earnings means. The change in equity because of the addition of income. It could be the subtraction of loss if you have a loss, and of course the subtraction of dividends. So we didn't have any retained earnings before May 1 because it was a brand new business. So there was nothing there. But how does equity change? Well, we added some net income and we subtracted out some dividends. Do we know what net income is? I'm not going to go through it all again. I've got it right here. It's 5,990. So we're adding 5,990 in net income. And do I know how much I took out in dividends? Yes, I had it right here. Looks like we took out 1,400. 1,400, and I think it'll automatically do the right math. So there it is, 4,590. Looks like that's okay. Let's check it out and see if it's right. Answer is complete and correct. So happy with that one. Then we get down to the balance sheet. What does the balance sheet do? Well, the balance sheet shows my accounting equation. It shows assets, and then it shows liabilities and equity, totals them all up, and these things should be equal, right? Luckily, we have all of our assets over here, so this chart's kind of helpful now. I'm not going to go back up and go through it again. So I have cash, and all the way down there at the bottom of cash, right here's the number, is 42,780. Okay, I have accounts receivable. Make sure we get the right one in there. And that's 0. We'll see if it's okay just leaving it blank. Office equipment. And we have 1890 over there. Okay, that looks like it for assets. I get over to the liability side. I only have one, and it's accounts payable. And it looks like it's 80 bucks. You'll see it right here at the bottom. $80. Okay. I don't have any other accounts payable, so now we're down to equity. I've got common stock, and it's 40,000. Well, and then what else? I mean, obviously I can't be done. Well, the other accounts are dividends, revenues, and expenses. But here's the thing, folks. This stuff is already accounted for in retained earnings. We did it right here. We added net income. This 5,990 is 11,100 minus 5,110. That's what makes that number, and then minus 1,400. So all three of these numbers are accounted for in this 4,590. It's why we do the statement of retained earnings. We simply take this information and bring it down to here. So we're going to do retained earnings. There it is, and it's how much is it? $45.90. Obviously I have a problem here because I didn't put an extra zero on common stock. Make sure you realize this. I didn't put the other zero on this. This is 40,000. Okay? And look at what happens. I'm done, by the way. I've accounted now for the entire equation, right? All assets, all liabilities, and all equity are right here, and they are in balance. That's why we call it a balance sheet. Okay? The next one really sucks. So this next one is dealing with the cash flow statement. We haven't really spent a lot of time talking about the cash flow statement because number one, it's going to be covered in another chapter in its entirety, but they want to just give us an introduction to it here. And again, it's really difficult when you've got to go and analyze every single transaction to see what's going on. So I want you to notice a few things. We'll just explain it as we go. This first part talks about cash flows from operating activities. That's any cash flow that affects net income. Any movement of cash that affects net income. Well, if I were looking at this chart over here, do I know of cash that affected net income? And the answer is absolutely, because if I have a cash in that is a result of revenue, right? By the way, that can also be the result of cash in for accounts receivable, right? Because that is from revenue. Those are cash from customers' transactions. And if I have a cash out because of an expense, likewise, because of an accounts payable that dealt with an expense, I have a cash flow out or a cash use for operating activities. Not the best way to do it. It's not the way we really do this. The publisher is purposely trying to make it hard just to make a point so that you'll understand why we do what we do with debits and credits later. Then we've got cash flows from investing activities. That's any cash movement, right? Cash in or cash out because of investing in other assets like office equipment. So if we bought office equipment, I would expect to see that in cash flows from investing once we actually moved that cash. And then we have cash flows from financing activities, and that's going to be any cash movement that deals with equity accounts, such as common stock and dividends, and also if we had any loans, like a mortgage or a note payable. Those are considered financing activities. All right, let's see if we can figure out what's going on. Let's just look at the first drop box and see what we can do. And you'll see that the kind of things we're dealing with, really up here, we're talking about cash from customers, cash receipts from customers, and cash paid for expenses. So I want to deal with the customers first. Let's see what we can find. And we see here that we have cash received from customers. Okay, so that seems pretty simple. Well, here's revenue, right? I received that $5,400. It looks like I did not receive this $2,500 on this transaction, but folks, I definitely received it right here. See this? This 25 became cash here, so I do want to count it. I didn't receive cash on this 3,200 here, but I did receive it here, so I do want to count it. It looks like I received all the cash from customers. All of the sales that I have received in actual money, also verified by the fact that nobody owes me anything. So that looks like I have 11,100 as cash received from customers. It's just the same. It's not always, because if they owed me some, then I wouldn't have received it all and I wouldn't record it there. Next, I have to deal with the cash paid for expenses. Okay, so my first question is, did we end up paying this one out, this $2,200? I don't even remember what the $2,200 is. I've got to go back and look at it again. I can probably see it on the income statement. It was for rent. I actually paid that money out for rent. So here we go. I'm thinking it's going to be cash. I'm just going to type. It's a little bit easier. Cash paid for rent. And by the way, it's set up here that cash outflows should be indicated with a minus sign. So that's minus 2,200. Okay. Now I look at the next one. It looks like I paid out the $750, but remember that was also because of combined wages, right? So let's see. I'm going to go look at the income statement again to see if it helps me. And this one was for cleaning expense. That's the $750. Did I pay for it? The answer is yes. I actually did pay for that. So now I'm going to have on my cash flow statement, cash paid for cleaning. This one's a hard one, right? It's getting tough. Paid out $750. All right. The next $750, I think, and this $750 as well, were both for salaries, right? Isn't that next one in there? Salaries expense. It looks like I paid all of it out, so it's cash paid for salaries. And let's see, where are we? It's got to be in here somewhere. There, cash paid to employees, same thing, minus $1,500. Okay, so that covers that $750 and that $750. Now you get down to this $80. Okay, well, wait a minute. I didn't pay anything for that, and it doesn't look like I ever have, right? I still owe that money, so I'm going to skip it. I'm not going to deal with that $80 because I haven't paid for it. We already took care of this $750 with the salaries. Then we have $300. If I recall, that's the telephone. Cash paid for telephone was $300, and then the cash paid for utilities was the $280. Okay, so now, and that's it. I don't have any more expenses. I don't have any more revenues to deal with in operating activities. I have a positive number. That means that the cash received from customers, or the cash inflows, was bigger than the cash inflows, and that tells me that I have net cash provided by, it's a positive, provided by operating activities, a positive number. You might say, well, gosh, the only thing that's different is the 80. Well, this is a pretty simplistic model, but it's really hard to work because we haven't recorded it the way that we would normally record it in accounting. Next one's going to be cash flows from investing, and that's dealing with any cash movement because I bought or sold an asset. Not including accounts receivable, because accounts receivable has to do with revenues. The only other asset we have is office equipment. So my question to you is, have we moved money in order to purchase or sell equipment? And it looks to me like we owed it. See, we bought it on credit, but then we turned around and paid for it. So we have actually moved cash out in order to buy this office equipment. So cash has been used. Let's see what we can find. So we've got cash paid for equipment. There it is. And it's a minus $1,890. Okay, because it's a cash outflow. It's the only investing activity we have, so we need to title our total account. And this is going to be net cash used by, because it's a negative, it makes sense. It's not provided. It's net cash used by investing activities. Finally, we get down to cash flows from financing activities. And the cash flows from financing activities is going to be any cash movement because of owner transactions, such as common stock and dividends, and then also any cash movements from any loans payable, like mortgages or notes, bank notes, that kind of things. We don't have any of those. All we have is stuff that's going on between the ownership, common stock and dividends. The first one looks like we actually got money from the owner for common stock. So that's going to be cash in because of common stock. Let's see if we can find it. A cash investment from the shareholder is a positive $40,000. Okay, what else happened with the shareholder? Hopefully you're saying dividends, right? Did we pay it? Yes, we did. So that's a cash movement out. It was $1,400. Let's see if we can find it. And there it is, cash dividend to a shareholder. It's a cash out. So it's minus $1,800. Okay, $38,200. Looks like it's a positive number for a total. So what's that? It's going to be net cash provided by financing activities. Okay? All right. Have we covered everything? I guess that's kind of the question. Have we covered everything that's in here? And I'm realizing that I already made a mistake. Look, hopefully you realize that I just put that in wrong. Why did I make that $1,800? I don't know, because my eyeballs are working really, really hard to see this small screen. This isn't 1800, this is minus 1400. Again, I make mistakes just like the rest of us do, but that one should be a negative 1400 because that's the dividends. I have no idea why I ended up getting 1800 in there. My brain had a bubble, I guess. Net cash now still provided by financing activities, 38,600. And we kind of get down to this new number. Well, what's that number going to be? It looks like it's a net increase in cash. It's a positive number. It certainly isn't a negative. That would imply a decrease. But what does it mean? It means that my cash has gone up by 42,780. 6,070 came from operating, 1,890 was used in investing, and 38,600 was provided by financing. Now it says, hey, what was your cash balance May 1st? It was nothing. We know that. This is the beginning of the business. So what this report is telling us is that your cash should be 42,780. We're trying to prove cash. Is it right? Well, I don't know. You tell me. Is it right? This says it is, right? That's my ending cash balance in my chart. But where else can I find cash? Right here on the balance sheet, 42,780. These reports are very interrelated. Do you see that? Look at the income statement. I compute net income, and I have to use it to create retained earnings. I need to create this number in order to do the balance sheet and make these numbers balance. And then with the cash flow statement, I need to prove that this number matches cash on the balance sheet. Very, very, very interrelated reports. And that's what it's about, because that's what keeps it reliable. If I had left this wrong, this wouldn't match. And I would know that I have something wrong. Okay? So that's what's happening on this one. All right, I'm going to go ahead and expand the window because that gets us over in to our very next problem, where we have a whole new problem. You know what? I probably should go check my work. Let's kind of stay par for the course. Check my work, and let's make sure all of those statements are right. There's the income statement, statement of retained earnings. Look, it did go ahead and count that one as wrong, so it didn't want the blank there. Let's go ahead and pull that question back. I did it kind of as a test. I wonder what happens if we do it as 0. I'll tell you that in real world accounting, it never wants to really see a 0 account on a financial statement. And the 0 is right, but it doesn't want accounts receivable there. So I say we just go take it out. How about that? We'll just move all this stuff up. How about we go office equipment and do the 1890, and then we'll go take this one out and this one out. We've still got 44,670. Everybody see what I did? Took that accounts receivable out of there, hit check my work, and it looks like now we're good. So don't use those 0 accounts. There's the statement of cash flows. Looked like it did all work out once I corrected myself. Okay, return to the question, and let's move on to the next set.